Hello and welcome to another update video on Solana. Obviously, flash crashed yesterday. Solana, one of the better ones, I'd say, or one of the stronger ones, at least. Solana has been holding better than others. At the same time, however, it also hasn't recovered that much, right? I mean, I just looked at render, which kind of crashed completely and then recovered like 300%, something insane. On the Solana chart, we had a crash as well, but it looks much more humane. It was even covered here by this scenario we were tracking already over the last few weeks, this potential B wave correction, yeah. Because remember that after the 5-wave decline that we saw from the 18th of September high, we only saw a 3-wave move up and therefore expected the move down to unfold. And it even maxed out completely this support area. I mean, this was not needed, but obviously it did that, especially in light of, you know, those structures that we saw across the sector. I have to say, though, it held support, okay? At least it's holding support for now. I mean, we'll have to take a look at the micro patterns in a minute to see if we have any chance that a low has already formed or which levels need to hold. Here, I just wanted to take a moment to say, look, the move to the downside, what do we normally track for a C wave down? Yeah, if this was in our white scenario, an A wave to the upside, and this was a B wave to the downside into the this was a B wave to the downside into the Friday low, late Friday low, then obviously it's an ABC structure, right? So ABC in a B wave, and based on the microstructures, we can take the length of the A wave, then we go to the high of the B wave. And in terms of targets, I mean, normally at the very least, the 100% extension, that was $179. Well, that's exactly where we are now. So that it reached that level. Of course, we could go lower, but then we would break below standard support, and it would start to be a bit deep for a B wave. Well, generally for a B wave pullback. So one more low would still be acceptable, but it will start to make alternative interpretations more likely, which I explained in the last video, right? So one of them could be a larger B wave, like in the yellow count. We have basically, to keep it simple, $172.70 as support. That's holding for now. Below that level, I've got here the red line at $155.70. And below that level, $126.50 as next support level. These are the next structural support levels, some of them invalidation points, specifically important for the bullish scenarios. Because, you know, I mean, this pullback was deep, yeah, but it didn't even invalidate the AB pattern we were tracking. Like, therefore, all still relevant. But below the first red line here, the swing low from the 2nd of August at 156.50, the directly bullish AB structure here will be invalidated. Now, we now need to pay attention to the microstructures to see if the bulls have any chance to turn this to the upside. So let's take a look at the shorter time frame for Sol. I don't really have any clear microstructures yet, yeah? So what I said earlier today is, well, this is our account. You see here the support area as well and everything. You see the red line at 156.50. But I said I don't really want to put any like made up microstructures onto the chart. It doesn't make sense at the moment. The market is still too fragile and still too much, I would say, in movement, yeah? Now, what I would really like to see next is that we are holding above the 78.6 retracement, so at least avoid at least avoid the decisive break below that, and that is at $176. Now, at the moment, well, we have avoided a decisive break below $176. We have tested 173.30, which is acceptable for any corrective pullback, which is the 88.7 retracement. It is also more like a 3-wave move down, and we have not broken below the Friday low. But to even consider that a low of sorts formed here on Friday, like overnight, yeah, to even consider that a low formed, we need a break above this green line, which is at $199.70, basically the $200 level. That's the first indication, because that's after the flash crash, the first rally point. Yeah. But then again, if we add volume profiles, and you see that here, the real volume, selling volume kicked in here. That was even a little bit higher, and that's at $270, $207.50. So the very first step for the bulls would be to drive the price above that $199.70 level, and then the $207.50 level. Really only above $200, so $199.70 or 75. Only really with a break above that level, we can even consider that a low of sorts is formed. The downside pressure could still intensify, or we might just see one more low. Yeah. Because what I'm thinking about, maybe this is turning into a triangle here. Yeah. And then just one more low. So I'm just considering that. The good news is, if this turns into a triangle, at least we have a structure to work with. And triangles, while they don't really confirm a low, while they don't really confirm a low, they are basically the last consolidation before low forms, typically. So I'll keep you updated about that. I mean, there's just no point adding microstructures from an Elliott wave point of view. I could label this as an A, B, C, maybe a 1, 2, but it's just too small. I would need these 5 waves. Yeah, I would need these 5 waves to consider that. I mean, from a structural point of view, to confirm a low. Yeah. So, but it's too early, so we'll see how it unfolds over the weekend on Sunday. A quick reminder, tomorrow we've got our member live session again. We'll take a look at all the charts, probably do a deep dive, talk a little bit about what happened, and so on. So if you wanna join us and need some emotional support, then yeah, feel free to do so. As a member, you can access this live stream. It's at 5 p.m. UTC. As a member, you also get additional benefits. Plus, you get, as a gold member, access to our Discord server with a lot of additional updates. Check it out. And then, yeah, also consider to join us on X for additional charts, news, updates, and much more. I'll leave a link for you guys in the comment section. Thanks so much. Bye-bye.